Hi, thanks for joining me in my market report. My name is Mike, and my market report is about mortgage rates. We kind of get into the nitty gritty of what goes into impacting a mortgage rate on a daily basis. If you're not aware, mortgage rates are based off of mortgage backed securities, which are basically bonds that are packaged and resold onto Wall Street. This is why they can, on a volatile market, they can change multiple times throughout the day. Uh, so when you look at these billboards and see these rates, they may not always be applicable by the time you contact them for those rates. So based on, there is a lot of movement in there. We kind of get into whether it's economic report or headline news or the sentiment in the markets. We'll kind of give you some gauge as to what's impacting mortgage rates and what's going into uh, for the day, as well as try and give you some insight if there's anything in the week that might go ahead and impact the rates as well. So, without further, a little bit about myself is I am a loan officer. I do work with the national lender. I'm here to assist in any capacity that you like, whether it's talking about mortgage rates, or if you want to talk about um, different loan programs that are available out there. If you got some situations that you're thinking of using your mortgage as a solution, we've done a few scenarios where we've helped out people who are going through divorces, to people who are trying to do college planning, to people who are trying to look ahead to do financial freedom, or to go ahead and retire earlier. So we look at different avenues where we can help you to obtain those objectives. And so please feel free to reach out, and we can certainly discuss how we can assist you in those capacities as well. We do refinances as well as purchases. So if you're looking to buy and need that pre-approval, we're here. We can help you out with that. We have a very simple program, a very simple mobile app that you can utilize and try to make it streamlined, make things a lot easier for yourself. We got a lot of different loan programs, from our physicians loans to your jumbo loans with some great pricing, great terms on there, to your regular conventional, USDA, VA, and FHA loan programs, and other loans we have access to, from bank statements to asset-based loan programs to investor loans. So you need anything in that category, we're here. Without further ado, we'll just jump right into the report here. We'll start with the economic data. Today is the big day in terms of the catalyst for the week, and that is the Bureau of Labor Statistics, or BLS, jobs report. So we'll touch on that here in a second, but we'll start off with the average earnings month over month for the month of August. So in July, it increased 0.4%. Forecasters count for 0.3% and exceed that by 0.6%. So, of course, this is something we're watching because this is inflation based. This will drive up inflation as employers are having to pay more money to keep people coming in. Also, we're also seeing a lot of people who are trying to retain people, is another thing they're doing too, by increasing the wages as well. Here's the big one. Here's the non-farm payrolls for the month of August. So in July, it was actually revised higher from 943,000 new jobs to 1,053,000. June's numbers got revised again too, even higher as well. So we have some pretty high numbers for the month of June and July here, which were awesome. However, forecasts were calling for 728,000 for the month of August, and it came in a measly 235,000. So needless to say, when you're going from a million to 235,000, that's a huge disappointment to the markets. And we'll touch on that here in a second. We also got average work week, which remained unchanged because back in July, it initially came in at 34.8. However, it got revised lower to 34.7. Forecast was supposed to remain unchanged at 34.8 from the initial one. However, it did remain unchanged, but with the new revision at 34.7. However, when you look at unemployment rate month over month, we went from 5.4%. Forecast come 5.2, and it came in expectations. So it did drop 2.2 points for unemployment rate, which is obviously good news right there. We also see ISM non-manufacturing PMI, or services sector. That went from 64.1, and forecast was supposed to increase, or not increase, I'm sorry, come down a little bit to 61.5, and it did come down to 61.7. Not quite to expectations, but did come down as a result of that. So let's jump ahead, take a look at the headline news, and basically everything's being related to the headline or economic data. Stocks are mixed. Nasdaq, surprisingly, is the only one that's in positive territory, whereas the other two indexes are in negative territory. I'll touch on why. The market's actually going the opposite direction of what you would think. Typically, we've been seeing bad news is good news, and so you think the stock market would be taking off. However, there's a lot of uncertainty in the markets. You got your sides going saying that they think the Fed is going to continue to taper, and that will be later this month. They think that they'll taper this year. And then you got the other side saying, the Delta variant has posed a problem, and they may want to see more data, and this might prolong the tapering. So you got two sides of the coin there, and it's creating a lot of uncertainty in the markets for both sides. And you got two camps that are kind of going back and forth with what they think. And right now, with this jobs report, you probably will get more of a catalyst later on once we get more Fed members speaking about and touching on that and see what their thoughts process are. So until we hear from Fed Powell and some of the other members, expect some volatility once we hear from those guys and see what they say. Because again, you got some uncertainty where you got people who believe the tapering will continue with this year, but you got another camp that are saying the complete opposite. So this is same thing with the bond market. We thought both the stock market and the bond market would have rejoiced on that, but because look at the wicks, long wicks on both sides here, that's a lot of uncertainty. You got people going back and forth with it, and right now we're down about 8 basis points. So we're not quite worse pricing yet, but it could. Some lenders may price in a little bit worse, and depending on when they came in. But right now we're hanging in between the 25 and the 50-day moving average. Again, as you can see here with these long wicks, this star effect, that's showing a lot of uncertainty in the markets right now. Yields went up, so that's what I was touching about is on NASDAQ. NASDAQ has been real touchy with the 10-year treasury, so when the 10-year treasury has been rising, they were kind of tanking a little bit because they're more growth stocks, and they utilize, with their expenses going up with their loans and everything else, the 10-year treasury affects that, and when that rises, that means there's less profits for those folks. But right now they are in the upper, they're going up today. Yeah, but we're jumped up to just under 1.33 right now on the 10-year treasury. All right, folks. Again, we're pretty much kind of unchanged, but it potentially could be a little bit worse. But there's a lot of uncertainty in the markets. We're heading into a long weekend coming ahead here because we got Labor Day on Monday as well. So we won't be seeing anything till next week. Next week we do got some auctions going on, and I'm sure there'll be a few Fed members speaking as well. So stay prepared as to what's ahead. But again, next week will be a short week, heading into a long weekend. So you're seeing more or less money coming out of both markets right now for the time being, and we could see some complete changes next week once they kind of go through the long weekend and make their decisions from there. All right, folks, if you guys like these videos, please smash that like button. We certainly helps out. If you guys got questions about mortgage rates or programs, again, please reach out. We're here to assist as well. We thank you very much for your views, and we'll look forward to see you guys on Tuesday. Enjoy your long weekend. Bye-bye.